Welcome to Funding and Disrupting, the most in-depth business podcast for companies looking to raise money and the investors who fund them. Every episode, we interview a funded founder, plus the investor who funded them, to get the real story of how it all came together. If you're searching for funding for a disruptive technology or business, or you're searching for the best companies to invest in, then you've come to the right place. This episode of Funding and Disrupting is brought to you by Aura Collective, a leading tech PR and marketing firm. Let's get funding and disrupting.
Welcome to another episode of Funding and Disrupting. I'm Keith Herman, your host, and today's special guest is Peter Simeonov, co-founder and CEO of Smart Migrator, the world's first automated cloud migration platform. It includes autonomous optimization and management, comparison with intelligent recommendations, seamless switching between clouds, and much more all in one space. Peter, welcome, and welcome to the show.
Thank you, Keith. Great to be here.
How are you doing today?
Pretty good. Enjoying sunny weather in London in the UK, and looking forward to a great weekend.
Well, yeah, I'm enjoying sunny weather, and I understand that you have a bit of a change in weather there in the UK.
We did indeed. We went from what was pretty much a summery weather about a week ago, and then it went in a few days to snow and very cold temperatures. But we're now getting back into sort of the mid-teens, which is good. Yeah, really looking forward to it, and great to be out and looking forward to getting back to meeting people in person, which I think we've all missed quite a lot.
Yes, absolutely. Well, I'm glad to hear you're in cold weather because I know you're awake now, and it should make for a good show. So I'd like to start off, and I think it would be nice, first of all, to ask you, do you consider yourself to be an entrepreneur? And if so, share with us why.
I think I do. Entrepreneur is quite a wide term, but I've always had this passion of making interesting ideas into reality and building them into a business, and always enjoying working for myself, which I think it's a common theme for entrepreneurs. And I've got these ideas that come into my head quite often, and it's all that creative flair that you can see how this can make a difference to people and businesses. So for me, that's pretty much equates to entrepreneurship.
Terrific. So talk to us. Tell us, where did you come up with the idea of Smart Migrator? Did it come to you in the middle of the night? Were you talking to somebody? How did you come up with the idea?
It came from my co-founder and CTO, who is also my cousin, by the way. We're both originally from Eastern Europe, and I've been involved in different sectors over the years, ranging from real estate, clean tech, automotive, aftermarket. Whereas my co-founder, he's been in the cloud migration space for over 15 years. He had a long career. He had at Hewlett-Packard Enterprise and then more recently DXC Technology. So he was at the forefront of the whole cloud revolution, architecting, delivering very complex projects for large multinationals. And he came up with the idea behind simplifying, automating the challenging process of migrating to the cloud. And the rest is history. That's how we started. He's the genius behind the idea.
So just let's kind of break it down and make it simple for the audience. So when we talk about migration to the cloud, why don't you kind of give us like a layman's explanation of, typically what type of environment people are in and, what's the reason to move to the cloud?
Well, cloud is a very, very hot topic nowadays. When we talk about migrating to the cloud, we're talking about shifting server infrastructure. So traditional IT people have servers, smaller companies may have server rooms within their offices, or others could have on-premise data centers. So when we talk about shifting to cloud, it's really about transitioning their IT server infrastructure to the public clouds. That could be Amazon Web Services or Microsoft Azure, Google Cloud, and really changing the way they access and consume their IT services. And a lot of the benefits revolve around reducing costs, so being more cost effective, but also being faster and more productive. Because the cloud opens a lot of possibilities to innovate fast, to use resources on demand rather than having to pay for your entire server infrastructure up front and having to maintain whilst only using a fraction of what you have. So it's a real shift into a pay-as-you-go model combined with cutting-edge hardware and software that the big clouds provide and all the opportunities in the cloud to be more efficient and innovate faster.
So some people might think, well, look, if I have my own server and it's in my office, it's under my control. So if I move to the cloud, it's no longer under my control. So they may have some sort of security concerns. What would you say to issues regarding security? Is it less safe, equally as safe, more safe?
Generally, security has been an issue in the past. I think in recent years, these concerns have pretty much disappeared as we've seen more and more sensitive organizations transitioning heavily to cloud. The reality is on-premise, many think that it's under their control, but to build a safe environment is not easy and it costs a lot of money to set up and maintain. The cloud, on the other hand, gives you a lot of different tools to set up a very secure infrastructure. There are also different possibilities of what is under your control and what is controlled by the cloud provider. So you can have anything from dedicated bare metal servers, which only have the underlying hardware infrastructure maintained by the cloud provider, and everything else is under your full control. Or you can choose for a more easier solution to manage where a lot more is maintained by the cloud provider. But there are a host of security options and encryption that is made easily available in the cloud and very cost effectively compared to what you can achieve on premise. And I think seeing a lot of big banks transitioning heavily to cloud. You've got the Pentagon. There's a lot of PR that came along with Microsoft winning the big contract for the Pentagon. So a lot of sensitive organizations are transitioning to cloud, and it's a testament that the cloud has all the security measures that even the most sensitive organizations can look for.
Terrific. I'm glad that you could kind of give everybody an idea, because I think a lot of people are a little bit reluctant or hesitant to move to another platform that's beyond their control. So thank you for sharing that. Now, as an entrepreneur, there's obviously, as you mentioned earlier on, you have a lot of ideas and things come to you, and pursuing a project obviously takes a lot of conviction and a lot of hard work. So having said all of that, what prompted you to pursue this particular idea?
I've always had a passion for technology and how it impacts and affects people's and businesses' lives. And when my co-founder came to me with the idea, I already knew quite a bit about cloud, and I knew that this was the future of IT. We did a bit of research, and what I found was that in particular, small to medium-sized businesses have a real struggle to adopt the cloud because there are many barriers to cloud adoption for companies, especially around the high cost and complexity involved. And at the same time, the other big barrier is the huge shortage of global talent. There simply aren't enough capable migration specialists with the skills and experience. So what you find is there are a lot of large organizations transitioning because they're able to afford the services of big consultancies or companies like Accenture, Deloitte, Cognizant, Rackspace, and countless others. But for smaller organizations, these companies are well beyond reach financially. And at the same time, they don't have the internal capabilities to migrate in-house. Very few can effectively do it. So I saw a huge opportunity here that in the SMB marketplace, that we can make a real impact, build a solution that is simple, that people can understand, without all the complexities that are typically involved traditionally, and also cut the cost to a fraction of what it's currently is through the advanced automation we have. So this opens up the marketplace right down from startups all the way through SMBs and large enterprises. So that's really what excited me, because we are creating a solution that really eliminates the barriers across the board.
Why don't you walk us through a brief use case for Smart Migrator and explain to us why it's so unique?
Sure. So if we let's look at a typical established SME organization. They may have a few hundred staff. Maybe they'll have an environment of, say, 50 to 100 machines on premise They look to migrate to the cloud. They don't have the internal capabilities because they are established. They've got a bit of complexity. If they turn to the big consultancies, likely they will either be rejected or they will be quoted an extortionate figure for migrating, which is really, really unaffordable. Or even if they can bear the cost, it's going to impact their business. At the same time, the struggle to find an alternative support is really, really tricky. So what some companies are really have firmly decided to move to the cloud, what they'll do is they will decide to reach out to AWS and ask for some support. They will explore some freelancers, and it will take them a huge amount of time to transition to cloud, easily costing them anywhere between $1,500 to $2,000 plus per machine to migrate, and a lot of pain during the process. What we're doing is we're actually building a platform that companies can use in-house. It has no technical jargon. It guides them through a step-by-step process.
How many steps are there, would you say?
There are 5 phases in the migration. However, we have really minimized the input of data that's required from the users. So it's I would say it's probably limited to under an hour, the total amount of effort that's required.
But that's terrific.
And also the complexity. We've had people who have zero AWS experience, zero migration experience.
And when you say AWS for the audience, let everybody know what you're talking about. We use a lot of acronyms on the show.
Certainly. So AWS is Amazon Web Services. It's Amazon's cloud, which is the market leader. They hold about a third of the global market share, with Microsoft Azure coming second behind and Google Cloud taking third spot. So AWS is Amazon's cloud. So as I started to talk about it, we've had trials with people without any experience in migrations, any cloud experience. And with a few guidance pointers from us, they've successfully used our platform to migrate service to the cloud, which to us has really been validation of what we're trying to achieve in terms of simplicity. And when you look at the cost, we're cutting away the cost because of the automation to a fraction. It varies between 3 and 10 times lower than using consultancies to migrate. So that really opens up affordability across the board for companies.
So let's say, if I wanted to migrate to the cloud, you're saying it'll take me, with your platform, Smart Migrator, it'll take me roughly about an hour of my time to invest. And that will open up all sorts of benefits by being hosted on the cloud, correct?
Exactly. And it will transition you to cloud a lot faster than traditional methods, because traditional methods are very much human-led. Even though some tools are used, we are completely automating the process. So the acceleration is extreme. We're talking easily 10 times faster, a lot more in some cases.
That's significant. So explain to us, we're going to transition here a little bit. So why don't you explain to us what your initial plan, to grow the project and how you envisioned raising capital?
Last year, when we built our first platform vision, we also started fundraising, which wasn't the best of timing with COVID around, but we attracted quite a bit of interest especially from early stage VCs in London. Our plan overall, as you mentioned when you introduced us, is to have a united platform that combines all the key elements that people need for cloud. Because transitioning to cloud is only the beginning. There are a lot of challenges beyond that when you look at how you can manage your cloud infrastructure. How can you utilize all the innovation, all the possibilities in the cloud? So we are working towards building a unified platform driven by AI and advanced automation that makes the process simple. It uses all the intelligence, all the comparison capabilities that we're building in to give people the ability to take advantage of all that's best in the clouds out there, not just in one, but across all the major clouds. So we're working towards creating a very powerful, unified home or a hub for people to use. And fundraising is a key aspect of that. We need to scale fast. We have very big ambitions globally. What we found was that in early days...
Did you have a specific amount in mind that you were looking to raise when you started?
Yes, we plan to raise about $1.4 million to give us an 18-month runway, give us the ability to scale our initial team and reach the milestones that we want to achieve within 18 months. Now that situation is changing a little bit because despite having a lot of interest from VCs, we struggled with only one aspect, which was the initial traction, because VCs, whilst they appreciate the huge opportunity, they don't have the knowledge and the experience to validate the market fit. Ask anybody in the cloud space, and they'll say, yes, please, we wanted this years ago. But for VCs, they don't have the knowledge. So they need to see the early traction that validates the market fit. So I would say over the last 4 months, we have focused on developing that traction. We are currently talking to some of our first customers, and we're also focusing on partnerships. Our growth model is heavily based on channel partnerships. And we have some very interesting conversations, very progressive discussions that are very, very close to some big announcements, I would say, which will transform us.
So that we can follow this. So you're saying initially you started out, you came up with the idea, you seeded the company yourself, correct?
Correct, yes.
Okay. And then you decide, okay, now we've seeded the company, we feel pretty comfortable, we have our minimum viable product, and now we're going to raise money to scale. Is that correct?
That's correct, exactly.
Right. Okay. And then what you found is you were getting resistance based upon an educational aspect of trying to get people comfortable with what it is that you're doing. So I understand that you have an educational barrier, so to speak. Were there any economic concerns or any concerns in terms of operating the company that made you shift in your thinking about your fundraising efforts?
Not so much operational. There were some concerns from investors around the fact that many see migrations as a one-time event. So they were struggling to see how we retain customers after migration. And that's where
they didn't see recurring revenue is what they were looking for.
Exactly. They were looking how this can become a recurring model. And that's exactly where our longer term vision comes into play, because by creating our platform that unites migrations with autonomous cloud optimization and management, we achieve exactly what they're looking for, and we retain customers long term. So that was one area that shifted our approach. But also in terms of team, we have a very strong team. We have leading experts formerly from the big consultancies and other big corporations, but we need a lot of manpower and very, very senior talent in order to scale our development. So I wouldn't say there were any operational concerns so much. It was more about how can we make this a huge global giant? How is this scalable? And that's what made us to shift and sort of pivot in our approach and bring many parts of our long-term vision now. So essentially now we're working in parallel on multiple fronts.
So you've seeded the company and you made the decision, we're going to hold off on the fundraising, and what we're going to do is we are going to shift and now focus on partnerships that we feel will help us get more validation of our platform, correct?
Exactly. We started focusing on partnerships, and we, especially in the last 3 months, we had some really good discussions with larger global names who are operating more in the large enterprise space. And for us, getting the validation and the excitement from senior architects in such organizations has been incredible. And we now see an opportunity where we can essentially replace what we were fundraising with revenues from projects that we'll be working with some of these partners. So it may end up being that we actually fund the initial stage through those projects and look to go straight into a Series A or a late seed round in the next, say 12 or 18 months, rather than continue fundraising now.
So this is actually an interesting juncture. And this is something that I want to kind of highlight, especially for entrepreneurs listening, because very often when you decide that you're going to pursue partnerships, a lot of those are pilot programs. And very often they are not revenue producing. So talk to us, and especially the entrepreneurs who are listening, how it was that you were able to actually get paid pilot programs.
There was a little bit of luck involved because
there always is, right?
There is, absolutely. I mean, last year, The biggest struggle we had last year was we don't have the connections that many founders and have. So for us, it was difficult to spread the message. We got a little bit lucky because one of our consultants who is helping us had connections in some of the big organizations that we're talking to. So he managed to open doors through personal connections he had. And these have been progressing really well to at the proof of concept stage. And when I say proof of concept, these are big organizations. So these are paid proof of concepts and are of reasonable size. The other the interesting source has been LinkedIn that I know many are talking a lot about, and I can vouch that it really works because some of the most promising routes and discussions we're having right now with potential partners and customers have come from people we've met on LinkedIn, and they've introduced us to others. And you never know who people we meet know. So it's
right,
very interesting.
You just have to be open and put it out there. And LinkedIn is actually a terrific platform. I've been on it since the very beginning, and I've found it invaluable as well. So let's talk about where you're at now. You have fundraising now on the horizon. You're now saying, okay, we're now at a point where we're feeling good about these partners that we have and what we have in the pipeline, but we're looking in the near future here to raise capital. So how much are you looking to seek, and what are you doing in preparation for potential investors?
Well, right now we are waiting to hopefully close those few big partnerships that have progressed really well, because this will give us a very good idea after the proof of concepts of what to expect as a pipeline going forward. There is a very clear need for what we're doing, and our team as well as supporting our innovation. So based on that, we wouldn't know about raise before we actually know what pipeline we'll expect. The good news is that some of these partners work on some of the largest corporations in the world, which means that we would actually be working on very sizable projects. So if that happens, then we would probably be looking to go straight into a Series A in 18 months or 2 years from now, having had some very solid track record behind us through those partnerships. So right now it's very difficult for me to say, but I'm certainly aiming that we raise probably somewhere around $15 million in about 18 months to 24 months from now, just looking at what we are likely going to expect, because some of these partnerships that can easily yield us between $3 and $5 million a year plus as revenue.
So this is actually an interesting point, because you started out looking to raise a much smaller amount, but it goes to show you the value of partnerships, the value of being able to fundraise with already having revenue and having notable partners. Would you agree?
Absolutely. It's an incredible leveraging power. And I'm a big fan of leverage and partnerships. There's no better way of scaling than partnerships when done in the right way, because there are lots of pitfalls as well.
Right. And that's why I founded Aura, is to help companies with raising capital and getting partnerships. And I think a lot of folks, until they've had that experience, don't really fully appreciate the value of a great partnership and what it can do. So whom do you see as your ideal investors?
I quite value corporate investors, I have to say.
And tell us why versus, venture capital or accredited investors in your particular case.
I think in our case, there are certain strategic corporate partners that could become investors as well. And for me, corporate investors.
You put a heavy value on partnerships, I take it.
Yes, I do. But
Yeah.
Corporate investors, aside from research that has shown that companies who have corporate investors in the early days tend to value and scale much better than those who don't. There was some research that came out, I think last year. I can't remember who did it, whether it was Borhurst or Gartner. But it goes into co-innovation. So there are a lot of possibilities with corporates that can open opportunities for research and development in the area that you work in our case, in the cloud. So I think a combination between corporate investment and VCs is probably the most attractive combination. And of course, hopefully adding a successful tech entrepreneur in the mix as an angel investor, because what such person would bring is all the experience of having done it before and knowing what to guide us and how to help us avoid all the mistakes that we would do without such expertise on board.
So you have a very holistic approach to scaling this venture, and I think that's
Yes.
a very smart way to go. What in a personal way, what type of relationships are you most interested in having with investors? What personally, type of connection are you looking to have? Or are you not, or is it not even about that, or is it just about the money?
I think the personal is more important than the money. And I've been speaking to a number of people who have raised funding recently. And interestingly, the ones who've had the best experience with investors have not necessarily taken the best deal at each round, but have selected the VCs that really are a good fit on a personal level. So always when we talk,
and when you say on a personal level, be a little more specific.
VCs who are genuinely seem excited about the opportunity and they're open to help more proactively than purely providing money.
So in other words, if you're a VC flush with cash, that doesn't put you to the front of the line in your book.
Not necessarily. There are some exceptions, but generally I find that the best performing VCs actually get involved with their portfolio companies, and they have teams and they look to help beyond the money because it's in their interest at the end. And I think I've found a correlation between VCs who have very successful results and the fact that they actually actively get involved in helping their companies to grow. So for us, that's really important, what they bring on the table. And are they people that we can get along with? Because there are lots of horror stories I've heard about problems in the boardroom.
Talk to us a little bit about that. Because that's a lot of people just feel like, oh, let's just grab the money and go to work. But if you can, why don't you share a little bit on that point?
Yes. VCs vary a lot and investors generally. And I think it's what I've heard from people who are way more experienced than me in this respect. There have been horror stories around founders losing control because the investors have a very different direction and different expectations. And at the same time, they have a lot of voting power and they've agreed to terms which can present a lot of challenges for founders. So that's why I think it's very important to be on the same page and to get along personally and also have a common vision of what they expect out of the investment. What is their long-term vision? Because otherwise it may present a lot of challenges later. So I think it's really, really important to be on the same page and being upfront and honest from the start and not necessarily look to get the best deal, because at the end of the day, what matters for founders is when they exit, what is their share and what is the value of the shares that they have in the business. A tiny difference in the amount they dilute, in the offers they get in the early rounds would not make a dramatic difference to the bottom line at the end. But the journey will be very different if they pick the wrong investors.
What about geography? Do you feel being located in the UK puts you at an advantage when it comes to raising money, or a disadvantage, or does it not really matter?
In our case in particular, I think on a European level, there's a definite advantage because the London ecosystem and investment space is far more active than the rest of Europe. Compared to the US, there are many, many differences, and many stem from the background of most VCs. In the US, there's a lot more entrepreneurs who become VCs, whereas in Europe, it's mostly people coming from financial services and consulting. So there's maybe a little bit of entrepreneurial spirit that's missing in the UK and Europe in general, which is a problem for very early stage companies, because such companies need a lot of support in the early days, and that support and the funds that are available and the way companies are assessed is becoming stricter and stricter. So it's becoming more and more difficult to raise those early rounds. Not to say that it's not easier, it's easier in the US, but you're far more likely to find investors who really see the big potential in what you're doing, and they're happy to give you the support. even in the early days before you have a market fit altogether. And that's something that's very different here in the UK.
What advice would you give to other entrepreneurs contemplating the early stages of fundraising?
I would say make sure you plan your immediate future, your first 18 to 24 months. Have a very compelling story, because investors buy people. They need to see that the team can deliver, because the team may deliver a very different product to what people may think right now. But it's the people, the team, and how you create the story and how you can make a compelling recurring model that is scalable, because that's in essence what investors are looking for. But having those key ingredients, I think, puts people in a far better position to get a successful raise.
Thank you for sharing that. So how may our audience learn more about Smart Migrator's platform, and how may they contact you if they'd like to get involved as either a partner or an investor?
They can have a look at the website, which is www.smartmigrator.com, or they can look us up on LinkedIn as well. So just type in Smart Migrator and you'll get to our page. You'll get to me as well and my colleagues who are on LinkedIn. So yeah, we're very happy, very keen to explore new opportunities.
Terrific. Well, with that, Peter, we're going to close out today's show, and we appreciate you being generous with your time and sharing your story and experience with our audience. We all know there's plenty of twists and turns when it comes to raising capital, and this is why your story is so invaluable to our audience. So thanks again. And until next time, keep funding and disrupting.
Thank you very much, Keith. It's been a pleasure.
Thank you for joining us on this episode of Funding and Disrupting. Don't forget to visit our sponsor, auraco.com, to learn more about working directly with Aura Collective's exclusive technology PR team. They'll help you craft your message, get noticed in the press, and help you get your venture to the funding finish line. Again, you can visit them at www.auraco.com. Keep funding and keep disrupting.